Hi, this is PR Sundar. Welcome to Pre-Market Report, sponsored by taxbuddy.com, a leading tax filing portal in India. On Friday, we fell because there was some confusion over STT and also because of this Daesh Bank issue. We closed at the lowest point of the day, which is technically not really very good. Usually, when the markets close at the lowest point of the day, the following day usually it gaps down or open flat. But what happened on Friday, US markets have recovered, and as a result, SGX Nifty shot up nearly 120 points. But however, Asian markets are not showing the same enthusiasm, and many Asian markets are actually down. That is surprising because even now the US futures, European futures are higher, and there are some good news coming from US. Reportedly, the Fed is considering expanding the emergency lending program for the banks. Then another bank is planning to buy Silicon Valley Bank. Also, there was some survey that shows that the pressure of withdrawal from the smaller banks, deposits withdrawal, that has slowed down. So, which means that people are having some kind of faith in a banking crisis. This banking crisis seems to be coming to an end. I think the ugly phase of the crisis seems to be over. Even on Friday, the Deutsche Bank recovered almost half of the losses it made in the morning session. That is the good news for US and European markets. But however, Asian markets, some are up like Australia, Japan, and some are down like Hong Kong, South Korea, China, Taiwan, etc. And SGX Nifty was too bullish on Friday night, but now that is coming down slightly. But as I told you, the bulls should be happy as long as Nifty closes above 17,000 for this series. And that's because we have a lot of India specific issues, and particularly the huge selling by FIAs no matter where market goes. On this backdrop, like Nifty trying to close above 17,000, and the recent low is 16,828. So I think that should be held by looking at the SGX Nifty. So SGX Nifty indicating Nifty opening around 17,000 to 17,020, and then we have only two more trading session after today's trading session. So assume that market stabilizes today, then next 2 days, so maximum Nifty can fall or rise maybe 200, 250 point maximum. So which indicates a range of 17,250 on the higher side, 16,750 on the lower side. Bulls will have to really work very hard to defend the 17,000. That 17,000 level was broken many times in the last 1 month, and hoping that Nifty will close above 17,000 for this series. And we cannot say anything, we still have 2 more days. But on a week to week basis, we were down significantly, but while the US markets are actually higher. So when Europe and US markets are recovering, so we may not recover, but at least we may stop falling further. So that is the hope for the bulls. Stock specific, in the last 1 month, the distinctly negative, bearish, very bearish stock is Reliance Industries. Sometimes it goes up, the next day it comes down. So it is hovering around 52-week low and hovering around 2,200. 2,180 is the 52-week low. And the second one is the huge underperformance by HDFC Twins. Among the banks, both Kotak Bank and HDFC Bank are looking very weak. And Kotak Bank, if I'm not wrong, is trading somewhere near 2-year low. Last 2 years, it has not gone anywhere. And HDFC Bank also. And the only positive bank is ICICI Bank. So as and when markets recover, we can expect ICICI Bank to outperform. So the simple trade now seems to be taking long position in ICICI Bank and taking short position in either Kotak Bank or HDFC Bank. So for the last 1 month, so that trade has worked very well. So we need to see when global banking crisis may be coming slowly down or maybe coming to an end. Of course, it's not going to be, like at this particular date, this crisis has ended, something like that. So, the people will be expecting some more bad news, some more bad news. If the bad news is not coming one day, they will think that it will come next day. If next day not coming, they will expect next day. So, over a period of 1 week, 10 days, if there is no bad news, and then slowly the banking stocks may recover. So, therefore, if global cues are good, European and American markets are good, continue to be good, then we can expect some kind of recovery in banking stocks. Remember, banking stocks are beaten heavily. And also Nasdaq seems to be doing extremely well, and here our IT stocks seems to be in a oversold zone in the very short term trade. So we can expect some kind of recovery in both TCS and Infosys. So keep watching Reliance, TCS, Infosys, HDFC Bank. And these are the stocks that will be in focus. These are the heavyweight stocks that will be contributing the most points to Nifty on both upside as well as on the downside. So looking at the open interest on Friday, the first trading session of this weekly series, 17,000 call added huge open interest, and it was trading almost around 100 rupees. Only in the last 15-20 minutes, the markets fell and then it has come down to 82, 83 rupees. But assuming that people have sold calls around 100 rupees, so I also sold few calls at around 110 rupees. So those people will lose money only if Nifty goes above 17,100 in the spot. On Friday, the Nifty future has gone into discount over the spot. Remember, 1 month before it was trading around 100 point premium, and now coming to 5 to 10 point discount. So you can see the kind of bearishness. So sometimes, very rarely, not many times, on the day of expiry, there might be some good short covering if the global cues support. And because the short term people are hugely having short positions. So FIAs, I don't think I have ever seen this kind of bearish bets by FIAs in the last 15-20 years. And consistently they are holding short position about 90 to 92%. So at some point of time, so they may have to cover the shorts. But 90% of the time, expiry works in favor of the bears, not the bulls. So in that hope, they may be holding it. So anyway, so we have 3 more trading sessions, including today, and market is expected to trade between 16,828 on the lower side and 17,255 on the higher side. And within this, markets can be very, very volatile. And I'm not a big fan of big gap up or big gap down. So big gap up in the morning panic, some people may square up, and then FIAs will take that as an opportunity. They will come and sell. So if the market gap up, don't consider taking any long position. And if at all you want to take some long position, wait for the dip closer to yesterday's closing level, and then you can take some long position with a predetermined stop loss. So I would suggest you selling put option of 16,700, 16,600 with double the premium as a stop loss. Let us say if you are selling for 30 rupees, keep 60 rupees as the stop loss. And despite market falling so much, the earlier I sold 16,800 put option, that is still in profit. But the thing is, it was not a naked selling. it was a part of the call spread strategy. So therefore, even if I'm making profit, the overall I'm not going to make any profit. So today we can expect yesterday's low to be held, and if yesterday's low is held, no, at least one dip may come, it may go closer to yesterday's low, but I think yesterday's low will not be broken. So that is the hope for the bulls. You all know that PR Sundar is always a bull. So let us see what happens today, and any rise towards 17,200, I will be definitely looking to sell 17,300 call option and above, and any fall closer to yesterday's low, then I might sell 16,700 and below put options, but premiums may not be very good because we have only 2 more trading sessions. The time value is very little. You may hardly get about 10-15 rupees premium. You are not likely to get good premium unless the VIX shoots up, and VIX is not likely to shoot up. That's because the European futures are higher and US futures are higher. So let us see what happens. So we are heading towards the 4th consecutive monthly fall in Nifty, 3rd time in the last 25-year history of Indian stock market. So that's it for now. So hope you enjoyed listening to this audio. Thank you for listening.